Why are you not taking advantage of the largest market in the world? Why are you not trading in the foreign exchange market? Why are you not taking advantage of a market that trades in one day 100 times the volume that the New York Stock Exchange trades in a month? As I work with global investors, I find that most people are interested in getting involved in the foreign exchange market. They just don't know where to go to get the resources, the education, and the tools to be successful. It's been 5 years now since I stumbled upon the Forex market. I thought I was a pretty smart guy as I dabbled in options and equities trading, and I was. Those are great markets. We all need to diversify. We should all be day trading in one form or another. But since that all-important day when a good friend of mine explained to me what the foreign exchange market was, and that this market, this huge market that I was not involved in, was a market that I needed to be involved in, since the day that I listened to him, my life has not been the same. From that day, I've built a company that has been my ticket to success. And that company's ticket to success has been the foreign exchange market. And now today we are here to share some of those secrets, to not just open your mind to an investment world that is waiting for you, but to also provide to you the initial training and education that you will need to tackle this market and be successful. That is my goal. So now without further ado, I would like to introduce myself. My name is Ryan Best, and with me is one of my senior foreign exchange trainers. His name is Nathan Muirbrook. Nathan actually was trained by Trading International and had so much success and did such a good job at spending the time and making the sacrifices necessary to become a good trader that he's actually become my best trainer. Nathan, before you were actually involved with Trading International and got to know what the foreign exchange market was, you were involved with other financial markets. What was it about this market that inspired so much of your time and focus? What was it about this market that so drastically changed your portfolio?
Well, Ryan, there really are so many reasons. As we are going to learn today, this really is a market like no other. I could probably go on for hours if someone would listen to me, and as my previous students know, if you get me going, I will go on for hours. But I suppose that the first key issue is diversification. As investors, we know that we must diversify. But the timing and the market are always issues of concern. If I make no other intelligent point today, make note of this. There has never been a better market to diversify into, and there has never been a better time.
Diversification really is a key focus. It really is a key issue. How many times have we all heard the timeless saying advising us, don't put all your eggs in one basket? And how many times have all of us put all of our eggs in one basket? Probably more than once. I talk to a lot of people week after week, and I'm sure that they feel that they're diversified. But how many people can really say that their portfolios are diversified? Diversification in real estate, bonds, annuities, and all the other money markets are true ways of diversification, but not the only ways of diversification. Not a lot of people know how and what diversification really is. Well, I'm going to talk a lot about the foreign exchange market. I'm going to tell you the ways to avoid the pitfalls of the foreign exchange market, but my most important points are always going to be that the foreign exchange market should be part of your portfolio. It should be part of your diversification strategies. You need to take some of your portfolio and diversify it in this market, the largest financial market in the world. Investors tend to trade what they know. Most people are likely familiar with this market, the Dow, or any stock associated with it. When the Dow was heading down, had you been using proper diversification, perhaps your portfolios would not have suffered as much. Perhaps you would have been taking a small hit, but again, it comes down to diversification. Let's take a look at the Dow for a minute. The Dow runs in trends. The first lesson pertaining to any financial market is that any market that has price or volume or time associated with it will most certainly run in trends. So Nathan, take the Dow for instance here. Give us a brief history of the Dow so that it'll help us more clearly see the trends that have defined this market.
Not a problem, Ryan. Let's first look at 1952 through 1956. We actually don't have a chart for this, but what was the trend doing at that time? It was going up. Let's look at 66 through 82. What was the trend doing at that time? It was headed sideways, wasn't it? That's a 16-year trend, a sideways market for 16 years.
Right.
That is a long trend, Ryan. Did anyone make money during those 16 years? Can you make money in a sideways market? Of course you can. You just need to know when to buy and when to sell, right? Education is always the key. Now we have an 18-year trend, 82 through 2000. We can see that the market was headed straight up. Could have you made money in this market, Ryan? Yes, of course, anyone could have, right? What has the market been doing in recent years? It has been heading down, right? Is that a trend worth noticing? Yeah, I would say that it is.
I want to make one quick point about diversification. We both know that diversification doesn't mean that we put all of our money in the stock market and diversify it into different stocks or sectors or even mutual funds. Most people have heard of the NASDAQ. We can see that from 2000 to 2003, the NASDAQ went down 77%. How would diversifying in a whole bunch of tech stocks from 2000 to 2003 worked for you? Not too well. I intend to show you how and why the foreign exchange market is such an excellent market to diversify into. We will be learning about that today. We will also be going in and teaching how to trade the foreign exchange market. It's really not that tough. This is a great market, and if me and Nathan get a little excited as we talk, it's because we are excited. The foreign exchange market, commonly referred to as the Forex, is such a big market. In most cases, it is the favorite market of Fortune 1000 companies and large banks. If it is their secret to success, like it's been mine, and they trade the foreign exchange market, why should we not be trading the foreign exchange market as well? A lot of these companies are using the foreign exchange market to diversify their portfolios. Why should we not do the same? Everyone's familiar with Bank of America. In 2001, let's look at the annual report of Bank of America. By the way, this is just public information, something that anybody can find on Bank of America's website. I want to tell you why I'm looking all the way back to 2001 in Bank of America's 2001 financial statement. Their actual revenue increased from $5 million to $541 million as it relates to foreign exchange trading. That's why. You can go through documents of this nature with a lot of companies. Diamond Chrysler, for instance, just last year made more money in the foreign exchange market than they did selling cars. Companies make money trading in the foreign exchange market. The secrets that they know are the same secrets that we teach. These are the same secrets that Nathan's become extremely good at implementing himself. Tell me, Nathan, help us understand the sheer size of this market. Help us get our minds around how big it really is.
Ryan, you mentioned earlier that the Forex market in one day trades 100 times the volume that the stock market does in 1 month. What is that in dollar amount? Well, the stock market does about 25 billion in a day. The foreign exchange market does about 2.5 trillion in 1 day. If you took all of the financial markets in the world and combined them, their volume for 3 weeks still wouldn't equal 1 day's volume in the Forex market. And yet, so many investors are not taking advantage of this market. Maybe they are unaware. Perhaps they do not understand what volume and liquidity have to do with everything. We are here to tell you that volume and liquidity have everything to do with your online trading. Everything.
Let's talk for a moment about timing. Not only when you can trade the Forex market, but also the timing of your trades. That has a lot to do with the liquidity that Nathan just mentioned. An amazing thing about the foreign exchange market is that it trades 24 hours a day. It is a world market. You will also see lightning fast executions. This is a market that thrives on today's technology. I have never seen or placed a trade that takes longer than 3 seconds to actually execute. A large majority of my trades are executed in milliseconds. You will not see slippage in the foreign exchange market like you do in other stock market or day trading platforms. Remember, we are talking about the foreign exchange market, but we are also talking about diversification. I am not telling you to take all your money and put it into the Forex market. That would not be proper diversification. What I am saying is that you need to diversify into this market. You need to take a portion of your money and place it in this market and trade it wisely.
Whoa, whoa, whoa. Hang on a second there, Ryan. Let's talk about this for a minute. Just what exactly is it that you mean when you say that they need to trade it wisely? For those of us who are fairly new to the foreign exchange market, how on earth are we supposed to know a wise trade from an unwise trade?
It's a fair question. Without education, you probably won't make wise trades. Wise trades come with experience. They come with proper training. Trading International and Currency College has based their whole business plan on making good traders out of people. More companies like Trading International should be out there trying to make their customers better traders. The motivation may not be there, but we here at Trading International are focused on helping you know what a wise trade is from an unwise trade. There's certainly a lot of money to be made in this market. We are talking about a market with liquidity like no other market has ever seen. What does all that liquidity mean? It means volatility. This means the market moves. The market moves a lot. This market also seems to trend well. With a trending market, it seems to be somewhat more predictable. This market, because of the volatility, is a great opportunity for day traders.
You know, Ryan, a market that moves as quickly and as often as the foreign exchange market does is certainly a market that affords the opportunity for a lot of money to be made, a lot of money. Movement always means that someone somewhere is profiting. There's always a buyer at the end of the sell, a seller at the end of the buy, and somebody is laughing all the way to the bank. We're here to teach you how to be that person who is going to get to laugh all the way to the bank.
That's right. We all understand the concept of supply and demand. Let's look at it this way. This market is concerned with actual currency. There's no commodity traded, just money. There's plenty of supply and a never-ending demand. A little history on the market, if you don't mind. I will give the short version. The United States, entered the foreign exchange market in 1971. There are pretty good odds that if you pulled a dollar from your pocket in the 70s, you could likely see that it was backed by gold or silver, by a gold or silver certificate. That means that the dollar you held in your hand actually was worth the physical piece of gold or silver. What about the money that you hold in your hand today? It says Federal Reserve Note. What does that mean? It basically means the money that you hold in your hand would be worthless without its perceived value. We all believe that it is worth something, and so it is. Holding on to an IOU from the United States government is really what your $100 bill is. Again, back to the 70s, the U.S. was trading with the French, for instance. And if you can imagine a Frenchman saying, okay, we're happy to take your money, but the currency, on the currency it says gold certificate, and we want that gold. We want to see the gold, touch the gold, and own the gold. After all, it is guaranteed, right? The U.S. finally grew tired of the gold standard that fixed the value of the currency to gold, and we abandoned it. We switched to a floating exchange rate system in which the dollar is valued against other currencies in the world, and suddenly you had, due to economic and political reasons, a consistent fluctuation of value. That is the big secret. That is how we make money in the foreign exchange market. Currency values are compared to one another and they consistently fluctuate. The dollar today compared to the yen is not the same as it was yesterday, and it's not the same as it will be tomorrow. And for those of us who can understand the reasons for the fluctuations, it's not hard to see how you can make good, healthy profits trading those fluctuations in the foreign exchange market. Nathan, if you don't mind, help us understand how the internet has shaped this market, why this market still is considered by some an infant.
It's a good point you raised, Ryan, and a good question. Why is this market still considered in its infancy? You mentioned that the U.S. joined the foreign exchange market in the 70s, but does that mean that you or I could have traded this market at that time? No, likely not. Well, perhaps if we had $100,000 in our back pocket and a private flight to Switzerland, maybe, but otherwise, no. It just wasn't possible. It wasn't until the Commodities and Futures Modernization Act that was drafted in 1998 that opened the door for brokerage firms to go out there and start allowing individual investors like you or I to start trading this market. And that is what is so exciting. It is a new market. It is a network of traders connected via the internet, and already it is by far the largest market in the world.
Okay, let's talk for a moment about what makes this market move. First of all, we are dealing with a market that is focused on money. And as we've been told since our childhood, money makes the world go round. Every major world economic event makes this market move. You've got business commerce, socio-political factors, all of which make the market move. In fact, commerce is a large reason why the markets have so much liquidity. Take, for instance, these Fortune 1000 companies that we've been talking about. All of these companies are doing business in the United States, correct? No, they're not. So, these companies that are doing business, let's say with corporate headquarters in Japan, need to make payroll in the US. So they've got to take their yen, they've got to exchange it for dollars, And in doing so, they make the value of the yen and the dollar fluctuate against one another. Does this market really ever slow down? No. Just like international business really never ever slows down. This market has a lot to do with these companies that transfer money from one country to the other. So we understand that commerce gives us liquidity. Now we need to understand what world economic events give the market its movement. Do you think that currency values might fluctuate if there were a major war, or for that matter, if there was a major rumor of a war? Yeah. If oil prices drop, or if the Japanese step in and try to devalue the yen, as they commonly do, all of these factors move the market. Nathan, help me if you don't mind. Address some of the other benefits of trading the Forex market.
Well, I suppose I'll start with my favorite, Ryan. This market basically has no extra commissions. For those of us who have traded other financial markets, the idea of a market that has no added on commissions might be a little hard to swallow. And if we have any bleeding hearts that are listening, don't you worry, your broker will get paid. They make their money through the spread. We have all likely heard of the bid and ask price, right? Basically, what you can sell or buy something for. In between the two is the spread, and that is what the brokers make their money on. So what you have in this market is something that you can look in the eye. What you see is what you get, in other words. So that is the first major benefit, no trade commissions. You ought to be very excited about that. What are some other major benefits? How would you like to trade when you want and where you want? The foreign exchange market allows us to trade 24 hours a day, 6 days a week. Where can we trade? We can trade anywhere that we can connect to the internet. I have traded in coffee shops, I've traded in the airport, I've traded in my hotel room, and I've traded with my laptop on the sofa at home while I've kept my eye on the ball game.
You made an excellent point when you mentioned the convenience of being able to trade this market virtually whenever you want. I want to explain the reason for this. As the world turns, financial markets open at 9 a.m. their local time. Starting with the Asian market, moving to the European market, and then finally ending with the US, these markets overlap. This overlapping allows us to have continual liquidity, or the ability to buy and sell at, say, 3 o'clock in the morning Eastern Standard Time. But let's take, for instance, in contrast, the New York Stock Exchange, or after hours trading in the New York Stock Exchange. If you've ever tried to trade after hours trading, you're going to find a lack of liquidity, the inability to find a buyer or a seller for the end of your trade. In the foreign exchange market, where we close Friday afternoon and open Sunday evening, there's a very short time when the market is actually closed. So most of the time, you're going to be able to find a buyer and seller 24 hours a day in the foreign exchange market. Let's talk for a minute about money management. After all, we are here to discuss improving our portfolios, are we not? You would be amazed how many people I talk to that haven't the slightest clue on how to exercise good money management. They should be using stops, limits, OCOs. They need to understand what their potential reward is as compared to their potential risk, none of which 9 times out of 10 has even been thought through. It can be a little harder at times in the stock market because of a little problem that some of us understand, that being gap up, gap down. But that is not a great issue in the foreign exchange market, where the foreign exchange market only closes once a week. You only have the chance of there being a gap up or a gap down Sunday afternoon when the market opens. I am often asked by individuals to see the foreign exchange market as if they want to see where all this action is taking place. But that is one of the key points that lots of people do not understand. There is no central exchange. There is no CBOT or NYSE like there is in the stock markets or the bonds markets or the commodities markets. The Forex is a virtual central exchange, if you want to call it that. This is a world market like no other, connected by computers and faxes and phones. This market is interbanks trading their currencies, calling one another, trying to get the best bids and asks. The biggest piece of the puzzle is the internet. The internet also allows me and you to connect to these banks and buy and sell like they do. A lot of us in times past have been troubled as we invest in the stock market. We have been inundated or affected by issues and concerns such as accounting or conflicts of interest with accounting. Rest assured that Arthur Andersen is not going to head to Japan to audit their currency. It just doesn't happen. It can be a little daunting at times as we try to keep up with the 40,000 stocks, 40,000 plus stocks that we find in the stock market. This is another great advantage of the foreign exchange market. Most traders in the currency market pay attention to six currency pairs. Can you imagine a market so simple? All you have to worry about is six currency pairs. Not a lot to digest. Definitely something that we can all get the hang of. Nathan, if you don't mind, can you run us through what these six currency pairs are?
Well, you have the Canadian dollar, the British pound, the Japanese yen, the euro, the Australian dollar, the Swiss franc, and of course, the US dollar. You might want to write these down. They are very important. These are the six major currencies traded in the Forex market. Again, the Canadian dollar, the British pound, the Japanese yen, the euro, the Australian dollar, the Swiss franc, and of course, the US dollar. That is all that you need to worry about, just six currencies. That makes trading just a tad easier, doesn't it? For those of us who have traded the stock market, we know it is definitely easier.
So those are the six major currencies. But how are they traded? Here's another exciting thing about this market. Every trade has a bull side or an upside, which means that every trade is going up one way or another because currencies are traded in pairs. For example, the major currencies that we just listed paired against the US dollar would be pairs worth watching because of their high levels of liquidity. Let's take a look at some of the major currency pairs on your screen. Remember, these currencies are in pairs. Their values are determined in relationship to one another, and we just need to determine as traders which one is going up and which one is going down. When you place a trade, at least one side is going up. Let's look at the euro-dollar currency pair, for instance. This will help us understand how we can make money in this market. If the euro gets stronger in relationship to the US dollar and you have purchased the euro or placed your trade anticipating that the euro would go up, you obviously stand to gain a profit. The flip side of that same trade would be that the dollar was increasing in value versus the euro. If we anticipated that the dollar would increase in value in relationship to the euro, then we would place a trade buying the dollar and selling the euro, and again make a profit on that trade. So then, the obvious key to this market is timing. You have to know when to buy and when to sell. That is why education is key. This is not a guessing game, but it is a skill that can be learned. There are some very simple forms of market analysis, and then there are some more complicated forms of market analysis. But as you come to understand the technical and the fundamental aspects of this market, you will understand that timing is everything, and you will understand when to buy and when to sell. Fortunately for those of us who are new to the market, there are firms like Trading INTL who have taken the time to develop the tools and education that will help investors who are new to the market understand the important issues of timing and placing wise trades. Take, for example, a program that we built called the Forex. Strange name, we know, but brilliant in concept. The Forex stands for what it does. It's the Forex executor. The Forex, is a trading platform that it connects our computers to the broker's computers. Or in other words, the Forex is the window to the foreign exchange market. Through this window, we are able to see price quotes, manage our trading account, and place trades. Let's look for a moment at an example. Here, we see that the Forex provides us a window showing all the major currency pairs. If we zoom in on the Euro USD for a moment, we can see that this is the current value of the euro as it compares to the dollar. It is important to understand the placement of these currencies inside their pair. Does it matter which currency is on the right and which one is on the left? It does. The currency on the right is called the cross. The currency on the left is called the base currency. Whatever action we take as traders, whether we decide to buy or sell, we are either buying or selling the base currency as its value compares to that of the cross currency. So if I place a trade and enter on this currency pair, I am essentially buying the euro in anticipation that it will increase in value or become more and more valuable than the US dollar. If so, I'm profitable. It's that simple.
It sounds really easy, Ryan, but maybe it sounds a little too easy. I mean, how can we know the future direction of a currency value? What is really stopping us from just guessing?
I hope everyone watching at home was thinking the same question, Nathan. We certainly did not come here today to waste our time. Of course, the point is not to guess, But that is the great thing about the foreign exchange market. As we mentioned earlier, the foreign exchange market is an excellent trending market, meaning that it is commonly predictable in its direction. And for those of us who have not mastered the art form of technical analysis, there are tools that make life a little bit easier. Take, for example, Forex charts. All pro traders in any market use charts, right? Of course they do. We use charts to analyze the statistical history of the market in hopes that we will be able to understand the direction of the future. Now, when I began trading, that sounded like a great theory, but I never really believed that it would be something that I could get the hang of or understand. And it took some time to get the hang of. What we have done or tried to do to the best of our knowledge is eliminate that learning curve. We all know that computers are very capable and intelligent resources, and since all technical indicators that tell us something about the future are based on mathematical patterns of the past, traders today have the advantage of charts that can calculate some of these predictions for us. How would you like to open your charts and see an arrow right on the chart either pointing down or up depending on whether or not we should buy or sell? Done. Not a problem. As you can see on your screen, that is exactly what we have done. How would you also like to have those charts send an SMS message to your cell phone notifying you of the great entry points that you pre-set up at your house on your computer? Also done and taken care of with this great Forex charts package. These are some of the visions, some of the trading tools, and some of the technologies that Trading International has developed in the 5 years trading the foreign exchange market.
Let me get this straight, Ryan. You're telling me that I can open my charting software, and on the screen will be little arrows telling me which way the market is headed? Where do I sign up?
It is pretty simple. Trading INTL is a company that has been designed around the individual trader. We have tried to think of everything that an individual trader might need in order to become successful. For this reason, we have developed software that makes it that easy. We have also developed various training tools for those traders who feel they need to learn more or who really want to understand the nitty-gritty of the technical or fundamental analysis in the market. For that matter, we have extensive training programs that are intended to take traders by the hand over a course of a few months and walk them through every aspect of the market. I am not here today to try and sell any of these products. From the time that tradingintl.com was on the World Wide Web, we have not failed to sell ourselves. The point is that the resources are available. Our main objective at this point is to help investors understand one key point. Nathan, can you guess what that one key point is?
Let me take a stab in the dark here, Ryan. Diversification?
That's right. That is the key. You must diversify your portfolio. And the foreign exchange market is the market that needs to be taken advantage of. Are there managed funds out there in the Forex market? Of course there are. Are there brokerage firms out there that are willing to take a phone call from a new trader and step them through the beginning stages of the market, help them get an account open, advise them as to which broker is right for them, help them get started with any training that they may need? Well, I know of at least one firm that has designed their complete business model around that form of client care. You need to take some of the eggs out of your basket and place them in the foreign exchange market. You understand now how big and lucrative this market can be. Can you imagine if you were able to become involved in the stock market in the first few years of its existence? And for that matter, if you were stepped through the process by a firm like Trading International? Can you imagine where your stock portfolio would be today? Take that excitement and get involved in the Forex market today. It is as easy as opening a $300 account.